Tired of watching your crypto just sit in your wallet? It's like having a pile of seeds and never planting them. Day by day, inflation chips away at its value, and you miss out on massive growth opportunities. What if I told you there's a way to make your crypto work for you 24/7, even while you sleep? Today, I am showing you how to turn your digital wallet into a high-yield crypto farm using the incredible power of Agentic DeFi. So, why just HODL when you can grow? Let's get into it. For decades, we've all been part of traditional finance, or TradFi. You put your money in a bank, they lend it out, and maybe give you a tiny fraction of a percent in interest. You're just a customer playing by their rules. But now, there's a revolution happening called decentralized finance, or DeFi. In this new world, there are no banks, no middlemen, just code. This means you aren't just a customer anymore. You are the bank. You get to provide the services, and you get to earn the rewards. But it gets even crazier. We're now entering the agentic economy, where AI agents, smart, autonomous pieces of code, are the ones doing all the heavy lifting. These AI agents work for you, finding the best opportunities and executing complex strategies, making this powerful technology accessible to everyone, not just financial wizards. So, how does this crypto farming actually work? It all starts with something called a liquidity pool. Imagine you want to create a small market for two assets, let's say Ethereum and the stablecoin USDC. To do this, you deposit an equal value of both, say $50 of ETH and $50 of USDC, into a smart contract. This combined deposit creates a pool of liquidity. Now, when other people want to trade between ETH and USDC, they use your pool. But who manages these trades? In the old world, you need a human broker. In DeFi, we have automated market makers, or AMMs. This is a smart contract that automatically sets the price based on the ratio of the two assets in the pool. It's a completely self-running system. The best part? For every single trade that happens using your liquidity, the trader pays a small fee. That fee goes directly to you and the other liquidity providers. This is your reward for keeping the market running smoothly. But wait, it gets even better. Earning trading fees is just the first layer. Many DeFi platforms want to incentivize you even more to provide liquidity. This is where yield farming comes in. Think of it as a double dip on your earnings. Not only do you collect the trading fees we just talked about, but the platform also rewards you with their own special tokens, often called governance tokens. This is the farming part of the equation. You're literally harvesting new tokens just for participating. This can dramatically boost your returns. Now, you'll see terms like APR and APY thrown around a lot. Here's a quick breakdown. APR, or annual percentage rate, is your simple interest. If you invest $100 at 10% APR, you'll have $110 after a year. APY, or annual percentage yield, includes the power of compounding. It assumes you're reinvesting your earnings. That same 10% could become much higher with APY. So always check which one is being advertised so you're not misled by flashy numbers. Now let's talk strategy. Not all farming is created equal. On one end, you have what I call safe havens. This is where you farm with stablecoins, like pairing USDC with another stablecoin like DAI. Since their prices don't fluctuate, the risk is extremely low. You can expect consistent, reliable returns, often in the 5 to 10% range, way better than any bank. On the other end of the spectrum, you have volatile pairs. This could be pairing two newer, high-potential tokens. The risk here is much higher, but so are the potential rewards. It's not uncommon to see yields of 50% or even higher. But here's a glimpse into the future, a trend for 2026 and beyond: AI-driven vaults. These are advanced systems where you deposit your capital and an AI agent takes over. This agent constantly scans the entire DeFi landscape and automatically moves your funds to the highest yielding, safest pool every hour, or even every minute. This is active management on steroids, done by an AI that never sleeps. Okay, it's time for some honest talk. Yield farming isn't all sunshine and rainbows. There's a risk you need to understand called impermanent loss. It sounds complicated, but the concept is simple. Remember how you deposit a 50-50 split of two assets? Let's say you deposit ETH and USDC. If the price of ETH suddenly skyrockets while USDC stays flat, the AMM has to rebalance your pool. To maintain the 50-50 value ratio, it will sell some of your now valuable ETH for the less valuable USDC. If you were to withdraw your funds at that moment, you might find you have less value than if you had just held on to the original assets in your wallet. That difference is impermanent loss. So how do you manage this risk? One way is to use correlated pairs, like two assets you expect to move in price together. An even safer way is to stick to stablecoin-only pools, which practically eliminates this risk. And a crucial safety tip: before you deposit a single dollar into any pool, always check if the platform has had its smart contracts audited by a reputable security firm. This ensures the code is safe and not vulnerable to hacks. So, are you ready to get started? Here's a simple, step-by-step action plan. First, pick your platform. You can start with big, reputable names like Uniswap v4 or Curve. Or, for a more advanced experience, you could explore one of the newer AI aggregator platforms that automate the process for you. Second, you'll need to connect a Web3 wallet like MetaMask or Rabby to the platform's website. This is your gateway to the decentralized web. And third, my biggest piece of advice is to start small. Deposit a small amount you're comfortable with, maybe $20 or $50. Let it sit for a week. See how the harvest mechanism works, claim your first rewards, and get a feel for the process. This builds confidence and helps you understand the dynamics before you commit more significant capital. The future of finance isn't just digital, it's autonomous. We're moving from a system where you ask for permission to one where you are in complete control, with AI agents working to grow your wealth around the clock. The tools are here, and they're more accessible than ever. So, I have to ask, are you farming yet? Or are you still just hodling? Let me know your thoughts in the comments below. And if you want to dive deeper into the world of agentic crypto, make sure you subscribe and hit that notification bell. We've got a lot more to explore. Thanks for watching.